All right, let's talk about something that can feel, well, pretty intense: Canadian taxes. I mean, whether you're new to the country or you've been filing for years, the whole process can feel like this massive, unsolvable puzzle, right? But here's the good news. Today, we're going to hand you the key to unlock it all.
And you're not alone if you have. You know that feeling when your accountant sends you the file or your software generates the final return and it's this giant document, dozens, sometimes even hundreds of pages long? It's all forms, schedules, and weird line numbers. It's no wonder so many of us feel completely lost. But here's the secret, the thing nobody really tells you. Underneath all of that complexity, there's a surprisingly simple and logical path. It's really just a six-step journey that your income takes. And once you see that map, believe me, the whole thing starts to click. So here's how we're going to break it all down. First, we'll look at why those forms look so darn complicated. Then we'll get to the good part, that core six-step calculation. After that, we'll clear up the huge difference between deductions and tax credits, point out some money you might be leaving on the table, and wrap up with 3 powerful ideas for smart tax planning. Okay, first things first, let's pull back the curtain and figure out why your tax return looks like such an intimidating stack of paper. Because honestly, understanding the structure is the first step to conquering the whole thing. So, why on earth are there so many pages? I mean, a professionally prepared tax return can easily top 100 pages. And it's not because you did anything wrong. It's because the system has to be ready for every possible financial situation out there, from a simple paycheck to really complex investments. But here's the thing. All those pages, they really just fall into 4 main buckets. You've got the T1 general, that's kind of the main summary page. Then there are the schedules, which are basically the worksheets where all the detailed math happens. T-forms are for more special cases, like if you're self-employed. And finally, you have the information slips, your T4 from work, a T5 for investment income. That's the raw data coming from other places. And the best part, you don't fill most of these out by hand. They're just generated for you. All right, now for the main event. Let's forget about all the different forms for a minute and focus on what's really happening. All those numbers from all those pages, they all feed into one simple 6-step journey that your money takes. And this is it. This flowchart is basically the master key. Think of it as the ultimate map for your taxes. Every single dollar you earn follows this exact path, from the top line all the way down to what you either owe or get back. See? Just 6 steps. That's all it is. We start with your total income. We whittle that down to net income, then to taxable income. From there, we figure out your base tax, adjust it to get your net tax, and boom, you land on either a refund or a balance due. Let's walk through it real quick. So step 1 all starts at lines 15,000. That's your total income. And it's exactly what it sounds like. We just add up every single penny you made all year. From your job, from investments, benefits, everything goes in the pot. It's the absolute starting point. Next up, we go from total income to net income. This is where we start subtracting some really important things called deductions. Think RSP contributions or maybe childcare costs. This number is super important because it's often what the government uses to see if you qualify for certain benefits. Then, from net income, we take one more step down to arrive at your taxable income. We subtract a few more specific items, and then we have it, the final number that the tax rates actually get applied to. This is the big one, the figure that really determines your tax bill. Okay, so we've mentioned deductions a couple of times, but you've also probably heard the term tax credits. You know what? Understanding the difference between these two is probably the single most important concept you need to know to get the best result on your tax return. So here's the deal, in a nutshell. Deductions reduce your taxable income. They literally shrink the pile of money you're taxed on. The logic is, hey, it cost you money to earn this money. Tax credits, on the other hand, reduce your final tax bill, dollar for dollar. The logic there is more about recognizing your family and social responsibilities, like medical costs or tuition. So one lowers the mountain of income before it's taxed, the other helps you pay the final bill. Knowing the difference is one thing, but are you actually using everything you're entitled to? Let's take a look at some of the most common deductions and credits that people, well, they just plain miss. Just take a quick scan down this list. Do any of these ring a bell for you? I'm talking about things like medical expenses, moving for a new job, the interest you paid on student loans, or even the first-time home buyer's amount. These get overlooked all the time. Every single item here is a real opportunity to lower your tax bill, and you definitely don't want to leave that money on the table. Okay, now that you've got the mechanics down, let's talk about shifting your mindset. See, filing taxes shouldn't just be this reactive thing you rush to do every April. Smart tax planning is proactive, and it's really built on three simple, powerful pillars.
So the first pillar is all about integrity and, well, making sure you get what you're owed. You absolutely have to report all of your income. But it is just as much your right and responsibility to claim every single deduction and credit you are legally entitled to. This isn't about hiding anything. It's about being accurate.
Pillar number two is all about timing. Seriously, the best tax savings don't come from scrambling around in April. They come from smart decisions you make all year long. Things like contributing to your RSSP or timing when you sell an investment. Thinking ahead is absolutely key. And the final pillar, it's so simple. Keep your receipts. Good records are your best friend, I promise. It means you can back up every single claim you make with confidence, and that gives you total peace of mind if the Canada Revenue Agency ever comes knocking with questions. And all of this brings us to this fantastic summary right here. The goal isn't just to pay as little tax as possible, no matter what. The real goal is to pay the correct amount of tax and to do it in a way that is clear, that makes sense, and that you could defend without breaking a sweat if you ever had to. So, we've given you the map. You can now see the path through the tax labyrinth. The question is, what are you going to do with it? Think about one thing you learned today. Maybe it's a credit you overlooked or that simple idea of planning all year. What's the one step you can take to go from feeling overwhelmed to feeling totally in control?